And good evening, everybody. This is Michael Filighera. I am with logicalsignals.com and tradershelpingtraders.com. And this is the Elliott wave update for the S&P 500 index for Thursday, July 15th, 2021. I've been working on a new ebook, and the title of that ebook is You Are Your Own Guru. And what all the text and all the things within this ebook are going to be are a description and the rules and guidelines for Elliott wave principle, and also Fibonacci number sequences, relationships between waves, relationships between the different moves via Fibonacci calculations, some advanced charting techniques, and also some advanced Fibonacci techniques. And in the beginning, as I'm doing the intro in the first 4 lectures within this, which will be available for free. And as soon as they're ready, please make sure that you're on my subscriber list or that you are on my mailing list so that you can receive your code to get the copy of the first 4 chapters of You Are Your Own Guru. Now, when I was doing my research for this, I went back to R.N. Elliott's original work, which was published in 1936. And in there, he, of course, was analyzing the Dow Jones cash market. And so I went back and I pulled as much data as I could get for the Dow Jones cash market. And that just happens to be over 116 years of data. And so I'm just going to quickly pull that up right now and open this little puppy all the way up to our max, where you can see that. And this is all included within the video portions of that intro. So you can see this actually goes back to 1903. So in this work, R.N. Elliott described and labeled this first peak as Grand Supercycle 1, and it began in 1858. And the crash of 29 through 32 was Grand Supercycle Wave 2. And if I went off of that as my groundwork for what we're doing now, we are in the process of finishing a Grand Supercycle Wave 3 in the Dow Jones, in that cash market. So when doing the counts for subsequent indexes, which include all these stocks plus more, I have had to update on a degree basis where those indexes are. Because from here, we are finishing a super cycle degree, or actually a 5-wave cycle degree move to finish a super cycle. Now, this all needs to be updated. But going back to the S&P, I've had to go back and take a look at the S&P as it relates to where we're at and where we're coming from and where we still have yet to go. So I have up to the degree. This is a cycle degree. And so within a cycle degree, you have 5 waves of primary degree. So what we're finishing here is a cycle 5th wave. And what we're now finishing, because I had labeled that the pandemic, that slide we had in March of 2020, as a intermediate 3 and 4, and that we are an intermediate wave 5. Well, I upped that degree, and that was a primary 3rd top, and here it is. And then it was a primary 4th drop. It was steep, it was vertical, it fit, and also the size of it fit perfectly, again, within our primary degree. So that puts us in a primary 5 degree advance off of the March 2020 lows. So within that, that's going to have 5 waves of cycle degree. And so we have cycle 1, it's not cycle degree, intermediate degree. Excuse me, changing cycles is too many. Of intermediate degree, here's wave 1, wave 2, and look at that. So I've had to switch gears on all of my internal, but it really does clean it up because suddenly, we were getting up here at the top and I was counting 5, and it's like 5 of what? I'm running out of degrees where I can break this thing down. And so that made me go back and look, and then doing the research for an intro to You Are Your Own Guru really provided the answer. And of course, that answer comes from the author of the whole principle, R.N. Elliott. So grateful for that. But now, today, by lifting all of the degrees by 1, if this high that we've just basically put in at 43.83.25 just completes intermediate wave 3, we're looking for an intermediate wave 4 correction. And this is a good start. It would be extremely shallow, but I've got an ABC. Extremely shallow. It could be, and that would be due to the absolute power behind the buyers. So if the buyers just come storming back in right now, because we've got an intermediate degree third to go, fifth to go up. But initially, I'm going to still we have to allow for additional downside. In fact, the market could drop 200 points from here. The S&P could drop 200 points from here, end up down in here. And that would fit beautifully and still would be perfect and still would be corrective. It would be 4, and we still would expect a big jump up. If I were to be counting these as complete all the way up to that, at the time that was a primary degree, but if I were now to count this as complete all the way up to the cycle degree, this should be going this way, not la, 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 but just like coming in, that's it, we're down, we're gone, we're just moving. And that's not happening. Now, this could be like a coil, or like a spring, it's just springing, the coil springing, gets off some energy, gives off some more energy, spring, and then just dives. That could happen. But right now, we're going to go with what we have right in front of us. Okay. This would be a 3. It could be, I can't tell the total finishing yet. But there's a possibility that this will shift and that we finished a 5 of something, and maybe this minor third, this should be a 5 actually. But let me take the 3 out because maybe this is the 3. Minor third, not an intermediate 3. Let me go back out because I think I forgot to change that. Yes, that needs to be changed to a 5th. Go back here, pull that back down, change that right away. It's easy to do. And then we will at least be making sense about what we'll do. Change that, so okay, and there it is. So we have minute wave 5, minor wave 5, intermediate wave 3. And if necessary, I can pull this down and I can make this a 5, and I can still put an intermediate. I could put a completing phase here, and that would be the end. Or we come up one more time, and I put this here, put this as a 4, and this as part of the 5th up to complete the entire thing. So it opens up some different avenues because I don't think the upside is done yet. The market certainly is not giving me that indication because they still come in with some intensity, even up here. So it's still, actually, it is consolidating up in the upper third. Actually way up in the upper third of all of the entire moves. It's just hanging out up here. Now, granted, it's only been 3 days, but really it's been pretty much above 4,300 for a while, a week, a couple of weeks. And the rally up didn't actually, this one didn't make it look like they were going to stop it. So this is pretty common, but again, it's actually in the scope of the bigger picture, it's shallow. So either the buyers are waiting, and we know that we've got earnings coming out, and so there's still a lot of things going that could affect an extreme rally or an extreme drop. So right now, I'm throwing this one together to see if, not to see if the spaghetti sticks to the wall, so to speak, but to see, because I needed to allow for additional upside. And when I start running out of room, the only thing I got left to do is to go and extend it but within the rules that Elliott set down. And so that's why I went back and I reviewed his stuff, and that helped me. Now we may adjust this again, but let's just say we are in a corrective phase, and I can run some Fibonacci retracements so that we get an idea. And if I'm going to do it from down into this cycle, I'm going to pull this first from here. So we'd be looking for, you know, somewhere 382. We've definitely been looking for 4,285 to 55 to 25. Those are pretty easy areas. And actually, if we were that down to 41.25, we'd be into that fourth wave of one lesser degree from here, which doesn't matter, but we've got to get down to the fourth wave in here, in that minor 4. So for a intermediate 4. So if I pull this open one little notch, let's see where that fourth is. It could, and there are the fibs that go along with it from where we are. It would be a huge fourth, but it fits into here. So we do have some levels coming off that would fit into this fourth. That's essentially where I think it should come. We need to correct this entire move, this move. And actually, I could go back even further, because we would run that fib from the bottom of intermediate wave 2. That's likely off the daily. And we might get much, much, much bigger numbers. It is. And I'm just going to stick them up there to see what we're looking at. All right. So now bring this back down, and we don't really get any overlap until it really starts to come into this zone. So 200 points. It definitely can drop 200 points. That's only 4,100, 4,100, not the end of the world. A 200-point drop can happen very quickly. It could be a shock to the market, brings us down, buyers come back, boom, we're off to the races to finish the whole thing. 1 disappointment, 2 disappointments, 3 blow the doors off. So much can happen. So we must allow for it. We're going to continue to track it. I do believe we still have more to go in any form in terms of a correction. This has all been good, but it's still kind of incomplete to me. So even if I have to go A, B, C, I can, and we complete it. It's kind of into the first little support zone. I will, you know, in other words, basically, if it's going to come in this shallow, it certainly can, but it just is really going to be demonstrating that what's lying underneath this thing is intense pressure to push up. It's almost like a volcano, and that magma top sinks just before it explodes. And so, because all of that pressure, the pressure pulls it down, and then the force of the explosion from below just blows off that top and off it goes. And that could certainly happen here. So it comes down in a spike and then just explodes higher. We've seen these spikes and we've seen these explosions higher. That type of thing. We're going into the bigger earnings next week. So I think we correct. I think we do have a solid chance of coming down to these levels before all is said and done. And then prepare for yet another complete. It would be an intermediate level if I'm using this kind of, nothing more. An intermediate wave 5 to complete a cycle. Wave 5, which completes a bit larger third. So what do we have? Upside actually should be limited unless it just really starts to blast through here. Then let me go back out, remove a couple, and I can throw some Fibonacci on for upside. Let's undo those and let's get rid of those. Yes, thank you. So if I'm going to put in correct upside, let me go back up and start on the daily. What I'm looking for is the first one would be is this 5 is over, so I can't use that. So now I got to go from the 2 to the 3 and to the expected level of wave 4. So, and I'm just going to we'll go up to that top, which is right there. And let's just say it comes down to 42.40. All right, that's just, we're thinking it should come down to here. Well, now, let's go back to that hourly chart and start pulling it over. Look at this. Sure. Tell me that. So there they are. But they're tremendous. They're up there, 4,800, 4,900. So we were worried about 45. We were worried about 44. And now we're looking at things that could possibly take it up to 49 or 5,000, 4,900. That is the sky. That is pretty high. And the adjustments can be made to the account to bring it back in. But, and I would just reduce the degree level. But I need, again, more information from the market in order to do that. So I'm not changing the trend. The trend remains up right now. We're not getting strong enough clues that that trend is going to shift to down for a next month or a month or two. It is still up, even with a drop down to 42.55 or so. That trend is still up. It's just having a correction. And so that's how I'm going to treat it. So we're not, even with increasing the degree or decreasing the degree of the wave count, is not going to upset the apple cart in terms of trend. When the trend is ready to turn, it's going to do it from either a primary level or a cycle level. That's what we're talking about. And both are big, would be big corrections. So we're not changing much in terms of what's coming. There is a correction coming no matter what. So even if this is an intermediate 3, we still have an intermediate 4. So it's either a primary 4 or an intermediate 4. And then we still have an intermediate 5. So we are still looking for, once this clicks and gets into gear, I am still looking for this next correction to bring us right into this area. Still the same place, even whether it's a primary or whether it's an intermediate, it's still going to be in the same place, right there. All right, I'm going to end it there because I've really gone over a lot. Tomorrow, again, Friday, expiration could be slow. I don't know, we could have fireworks. We'll wait and see, follow your moving averages. I would think the downside does have the potential to drop back into this zone. So it could drop another 50 bucks. Very easily could drop another 50 bucks and still be within the corrective cycle. Dropping all the way back down to here is still within the corrective cycle. I don't think that will happen tomorrow, but stranger things, okay? Whatever it is, it's going to be a shock to the market. They're going to get a shock, something that they probably were not expecting and to react to. And then they're going to have to, and it'll be a mad swing for a little bit. Upside, we have levels that could take us all the way back. We're going to have resistance via the moving averages. We're going to have resistance at different levels all the way up until we start breaking to new highs. Then I will add additional Fibonacci extensions. We will have points that we can go off of. If we're going to market, the market's going to start heading higher and we start breaking to new highs, we will have levels here that we can connect and start getting upside Fibonacci areas. All right, that's it for today. Have a great trading day. Tomorrow's Friday, expiration could be slow. Stay on your toes, and the next update will be on Sunday.